Okay. I don't even know where this is framing. Okay. Good. 2K. Everything seems rather clean. Fantastic. Very good. Let me close everything. YouTube Studio. All right. I think that's visible. Okay. Now I need to understand one thing. Content comments. Okay, the chat to you. Hello, Mason. Right. I pretty much have everything now. Hello, everyone. You can type in the live chat if you need anything or if you want just to say hi. Okie dokie. So you should be able to see GBP USD on Pepperstone with the big text in here, and the stream will begin basically in 2 minutes. As always, if you guys can, tell me if the quality is good, both audio quality and video. I think the video should be better than the audio quality because I'm just recording from a gaming headset and not from a professional mic. Say, oh yeah, of course, of course. YouTube is gonna do that for me automatically, and then it's gonna be visible on the live streams or the live section of my YouTube channel. All right, we have lots of things to cover. I think it's gonna be a 2 hour long video. Let me just add PST maybe on something like this. And in 30 seconds, we will begin. Yeah, the bond contract moved. You gotta use the U now. Probably since 2 weeks now. I don't remember when exactly, but it happened quite a bit. Maybe in here was not good on the 19th, but since then you'll see volume really started picking up. Before you start, so I don't disturb you, do you use UT? Oh yeah, we will use UT today. And that's something I check every weekend. Sometimes I don't show it, but I do check it. And the way I use it, it's a little bit different from what ICT taught, because I personally didn't find any consistency with this method. But it is what it is, no big deal. Okay, I'll put the live here like this. Good. Great. Can I toggle timestamps? Oh, that's good. And pop out chat. That's even better. Fantastic. I need this one up here, this one up here, the preparation here, and the live chat right here. Sure, Mason, you will see. So guys, it's about time. So we are basically 1 minute late. So as some of you know, because I shared the link on the Telegram group, and I'm not even trying to do that on Twitter because Twitter, when you share external links, they don't share it to anybody for whatever reason. They don't like external platforms being shared. I mean, with reason too. So I was away this week. I took a small vacation, wasn't active at all in the marketplace. So we will begin it with a small review, and I can already tell you that my weekly bias would have been incorrect. Reason for that is when we closed like this on Dixie, I was personally expecting, since we moved away from the weekly CB high in here and higher, and we immediately rebalanced, my expectations was price to go higher into previous week's high. It didn't do that, and that's okay. GBP actually moved way more than Euro. Um, we utilized this bullish order block, and now it's going to be interesting to see if we stop into this bearish order block on the weekly, and that would potentially make sense because on the monthly we hit this fair value gap here and we moved away, and now maybe we will have either a daily or a weekly retracement. So if we don't have that, of course, we will look for a move above this and potentially fill all of this, or at least 50% of this level, which would equate to roughly 300 pips of range. And 300 pips of range, you can easily get probably 60, 70 pips, no problem. On the day, so the bias would have been wrong. Why did I take this small vacation? Oh, it was a friend of mine at birthday basically, and I checked the economic calendar, and I'll show it again because I wanna, maybe this one is something that you can use when you plan to do something, whether it's vacation or whether you have to do something else. But the week was very dry. Let me show that. And I'll show that here. This was the week that we had. Let me actually remove this here. Okay. We had this meeting, which is always hit and miss, and by the way, it's Sunday, so who cares? We cannot trade on Sunday. Or we shouldn't, at least, because you can trade the first hour. Then we had Lagarde speaking, then we had services PMI for the dollar, and then unemployment claims. The price action on the dollar, which I'm gonna load up here. This is Monday, so Monday we first rallied, we came back into the range, so we had basically a move higher just to swing lower, so nothing too concrete. Then we did the same thing here, and then we started picking up on volatility only on Thursday, logically so, because we had unemployment claims at 8:30, and this is basically the candle is here that moved, came back in. Sell side liquidity in the form of previous week's low, which is a high probability target each and every week if it's not hit, and hits it beautifully. And then in here we just have the classic London low. We sweep it and we go higher for a small TGIF, very minuscule. And we can see that from the highest point to the lowest, you can see it went from 20 to 30%, basically in the middle, 25. and it went to fill this old imbalance, which was left intact. In here we hit it, but we didn't fully fill it. We came back in, we ran the stops, and it failed to go. It failed to go below it with a close and hold, and it came back in. And here we went. Let me check one thing. All right. Perfect. So, what did we have for Euro and GBP? I mean, the week, of course, was bullish. And actually, I'll highlight, and you don't see anything marked because I didn't do anything yet. But the week, which we will mark as weekly open, and we'll make it a little bit thicker, like 2 pixels like this. And in here, the same thing. We can see how on Euro, we opened, we moved lower, we went into this M15 imbalance, which was also BPR. We moved away. Then we came back in, running the Monday's low. Then on Wednesday, we tried to go below this one, failing, came back in. And then we find some support at this fair value gap on the H1, coupled with the BC consequent encroachment. Hit it multiple times. And this was the best opportunity for the week on Euro USD, at least for me and the way I trade. And it was price came back in into the London session, taking out the Asian range low and completely filling this fair value gap. So Fiji like this, hits it. We run the sell side liquidity, which I'm not going to mark. And basically this level lines up with the bullish order block. And to me, this is a good one because it hit higher time frame support, the daily BC consequent encroachment, and then we moved away, creating a fair value gap, or as some of you like to call, thrust candle by Tom Dancer. Price moved in, hit the upper portion, and in here started spooling. Something cool is how we have this low and this high. So if the market is indeed having a rotation, so what we have here, we have a low, this goes lower and this one fails to go lower. So in here, we created a daily swing low. And to confirm that, you can see that here. We had low, this went lower, and this went higher than this one. So on this day, since we now created the swing low, and we're going back to the basic of ICT, talking about when the swing is created, we look for previous day's high to being ran. We will see how we have this high, which is previous day's high. So this is the first target, and in London, ideally, it will create the low of the day. And the same thing, even if we mark the midnight open, which is right here, till 15 bond close, we will see how the market goes higher, just to make a Judas, accumulate below this level, and higher we go. This is the H1 opportunity with the daily BC running the stops, order block filling the imbalance. And this is not an order block to me, because now that we have created the daily swing low, the narrative shifted, and I don't think an H1 level will hold when the daily suggesting higher prices are likely. So going into the M15, we can see the following. Price consolidates in here, goes higher, higher again, Judas lower, hit the level, which is also now you can see consequent encroachment of all of this. Notice the body perfectly lining up at that level. And then the market starts delivering higher. On this time frame, I don't see any particular good entries, to be fair. So the H1 in this case was cleaner than the M15, but if we go on the M5, let's see what happens there. And the story here is a little bit different, and that's why I love M5. Hit the level, we run the stops. after running the stops, you want to be, if the market is really indeed bullish, you want to see a quick sudden move away. This is what you see. First imbalance that we create is this one. So purple in here. And the market finds higher prices. You want to see this level being having a close above, and if it hits it and retraces, you don't want to see a big retracement that invalidates down candles, and we don't have that, as you can see here. So I'm gonna have stops in the sense like this. It's barely visible. Let's go like this. Hits it. Okay, fine. Classic retracement can happen. You don't want to be seeing order blocks failing here, since we don't have any reason to go lower because there's no imbalance in here that needs to be filled. So this level must hold. It holds. As soon as you have this reaction, you are pretty confident that the market will go higher. Here you have your confirmation. In case you are still long from this level, you can move your stop loss here. The market keeps going, comes back in, fair value gap at the very end of the London open kill zone, hits it, and it stays in a range. Classic behavior, but it doesn't mean you cannot get an entry here. We also have two consecutive down candles, but I would have used the fair value gap in here because if price went down here, it was too deep of a retracement given the displacement that we had. The same logic, as you can see from this low, I mean, have this, from this low to this high coming back in to fill the imbalance. It's the same logic in here. 8:30, the release hits the market, goes higher. It's a daily level, but since the daily bias is bullish now, since we created a daily swing low, we don't look at these as key reversal point, but just level of order flows where retracement can happen. And we have the full closure on here of the imbalance. It's it 3 times and then starts delivering lower, higher, higher, and higher, hitting previous week's high. Why previous week's high? Because on the weekly, we didn't hit previous week's low, so odds are that the market, if it doesn't hit this one, it's gonna hit this one, most likely. Let me see if I have the inside day. I don't, but inside weeks are pretty common in the range of 10 to 15% of the times. So you never want to bet. Uh, you never want to bet that the week is going to close like that, even when the economic calendar is rather dead, like it was this week. So you can see we find still setups were still there. But my weekly bias was not this one. And the weekly bias, really, you have it before the week begins, and then you need more data throughout the week to really adjust for that. Sometimes it will quickly move, sometimes you will see something that filters out your trades. I don't think you can be that static as a discretionary trader saying, oh, I will only do this and nothing else will make my mind change my mind. No, the more data we have, the different our approach can be, or different entry, different way to place a stop loss and whatnot. So previous week's high, that's why we went for it. Made sense into that day. Why this day? Because it was the day with the basically most important news. So this is the day where we had the most volatility, and we had a daily range of 95 almost, which is a little bit higher than what Euro USD does. As you can see, an average is 72 last 20 days. So we went a little bit above it, and then market clearly rotated lower, hit this level again from the other side, bounced, when the stops break down, lower we went. On Friday, let's build some narrative in here. We took buy side liquidity. We stalled at that range. We broke down. We bounced from a daily level. This daily level, if it was truly bullish, it would have gone above it with speed and ease, but it doesn't do that. Instead, takes the high out, breaks lower, comes back in, and why a short here is ideal, or inside of this order block, is because we all have this backdrop of price broke down, We already hit a major level. It's going to be consolidating. So after hitting something like this as external range liquidity, what are really the odds of price going for it again? To me, very low, especially when we consider how euro was weaker than GBP. Okay, because all of these concepts work best when you compare to like assets. As you can see, GBP on that day skyrocketed higher. This one found lower prices, and these are quite correlated. So imagine you need to be somewhat fluid. But anyway, market hits this order block. I'm not going to mark the fair value gap, even though it was the better entry, because we are not here to have the best perfect entry, but to have consistent setups. I'll make it a little bit bolder, and this is a very good entry if you ask me. You get 2 pips of drawdown. For stop loss placement, since we have big wicks, I'd say here would have been good, like 8.15 with an entry here, 8.15 here. For targeting purpose, I don't see anything in here which needs to be filled. Let me check on the H1. On the H1, the only thing we really have that needs to be filled, it's this fair value gap in here. And we didn't even hit that. But of course, time of day is also a factor in our trading. So as soon as the price kept pressing lower and lower and lower, and we went there with speed inside the London close, anything in this range was worth either scaling or taking everything off. And you can see from this level with a pretty safe stop, just going below this low, it's basically a 2R, and you can go at this low and say 1 pip, I don't know. Profit level, just say 17.7, and that's a 211R. But of course, with commission and whatnot, you just get 2R. Clean, very clean. Also, to add to this trade, original consolidation, accumulation 1, accumulation 2, smart money reversal at key buy side liquidity, breaks down, comes back in. This is a breaker, high, low, higher, high, breaks down, hitting a key level. In this case is an M15 raid, breaks lower. Study out these candles. They basically have no body, very, very small. So in my mind, remove these, they don't exist, and this is the real imbalance. And you'll see how we perfectly feel that, and lower we went. So this is technically speaking a market maker sell model, which is decently clean, with a breaker, which might not seem a breaker, but it is, plus a fair value gap, which is somewhat hidden. But if you just go one step higher in time frames, either on the M5, M15, or like say M10, you will see that it's basically there. In this case, of course, these two candles are comprised by the two M5 candles, but on the M15 it's going to be very visible that it's there. But the concept is here that this is just stupid, silly manipulation and nothing else. 8:13 here, I didn't even have news, unless I'm mistaken, but I'm looking at the economic calendar and there was nothing. Still managed to squeeze higher. What's nice to see, and remember, this is all new for me as well, because first time I see price action for the week. I want to see if this run up was confirmed by ADXC with a lower low. And yeah, it was confirmed. So no SMT there. But we wait, breaks down, boom, explosion. Um, even though this is technically speaking an order block, because we hit the level and we started rotating, I'd never want to place a sell limit here with a stop above this. Not because I get stopped, but because I want to see fair value gaps or PDAs coupled with a no, I want to see PDAs coupled with a fair value gap, and I don't have anything like that in here. And I'd like to see some more continuation, really proving that the market wants to go lower before I just place my trade. Otherwise, it feels, yeah, the risk to reward can be definitely major, very good, but I prefer high probability instead of high R, to be fair. and we will also see why that's the case. And actually, we can go into it right now. Just let me drink some water. Okay, let me show that. I need to share monitor, right? Okay, I think you'll be able to see it. Good. Okay, so I'm now sharing my monitor and equity curve simulator. What I'm about to show you now, okay, clean. What I'm about to show you now is why I prefer high probability. So by that I mean 60% or higher instead of high risk to reward. This website is now basically closed. Let me see, even the Deutsch version, yeah. But we have two resources in here, so we will go for this. Agree, agree, agree. Let's see which one is cleaner. Basically, this is not even loading, so this is the cleanest. All good. So let's start, yeah, with an equity, I don't know, of 50K. And we will have a probability of winning of, I don't know, 25%. And our risk to reward is going to be 4 to 1, which make us profitable. Because if we have a 3 to 1, you can lose 3, only win 1, and you'll basically break even. So 4 to 1, you are making money. We'll say we are scalpers, so we take one trade every single day pretty much, just focusing on one session, and let's say 200 trades. God damn it. And numbers of line, let's say 30 simulations, and we will be risking 1%, and we will start the simulation. We can see the strategy is profitable, and it's profitable because we have an average performance of 73% given these variables, but at the same time, we have a drawdown. The biggest drawdown is 40%, and that's massive. It's a big, big drawdown. No prop firm will ever allow you to go into a 40% drawdown. The maximum that I've seen is my Forex fund with 12%. Okay, so you have a little bit of more equity, and the strategy is profitable. You can see that. You start from 50K, you can run it up on some simulation to 175, which is good money. And you'll see that you have a max consecutive losses of 21. So I don't know about you, but after 21 losses in a row, I'm not able to trade anymore with logic because it's big. It's already getting like, I don't know, 4 losses in a row while it's possible and it has happened in the past. It's not the best of experiences. This is terrible. 21, it would destroy my soul to be fair. But say we do the same logic, same thing. And yeah, that's exactly the same. That's good. And we say we have a 62% strike rate. We have an average win of 1.5. Number of trades, we still say 200. 30 lines, one risk per trade is 1%. And look at the difference. And let's have it like this. Okay. So on the left, we have the low probability, high risk to reward. And in here we have the basically the same stuff, but higher probability, not highest. Right? 62 is not the highest of probabilities. It's good. And a risk to reward of 1.5. Now, what can we see? Average performance. This is it's higher, first of all. It's 210%, basically against 73. The the biggest drawdown in here is 10%, which would still probably negate you the prop firm, because I mean you just go barely to it, and that's not good. But as long as you slowly trick this risk per trade and maybe place it at 0.5, you should be okay, because you will get an average of 5 to 6% drawdown, which is not the end of the world. It's surely not great, but you can live with that. Max consecutive losses, it's 7 against 21. Massive difference. And the max equity is superior to this one, and the mean equity, this is even higher. So average, as you can see, average max drawdown is 5% against 18. So that's why I revolve my trading around probability of like anything between in the range of 55 to 65 is good. Average risk to reward, if you can get 1.5 or higher, it's great. And strategies like this work, but they don't work. And you cannot really trade big money with strategies like this, because nobody will ever like an average max drawdown of 18%, while a drawdown of 5%, while it's not fantastic, it's acceptable. And all you need to do, if you just have a lower risk per trade approach because you're scalping and you don't change anything, see how this number changes. You're getting a 2.8. Yes, the average performance goes lower, of course, but see how we have the same number of trades in here, same. We have 11 losses in a row in this case. I mean, it can happen, and this is the worst case scenario out of 30 simulations. Thank you, Mason. And the biggest, this time is the biggest drawdown, is 5%. And the average of all these simulations, 2.8. Let's just say 3% with commissions. It's not bad at all. So this was just a little bit of an off topic, but important, because I wanted to show you why you should be focusing, in my opinion, first on the probability, at least get it to 50-50. And once you can do that, as long as you improve on the frequency, which is just the number of trades, or the win-loss relationship, which is basically risk to reward, you are good to go. And then you can just move the risk per trade to fit the criteria so that you don't blow the challenge. The website, let's see. Let me just go here. Okay, I'll give you the website in the chat right now. To Blast says the win-loss relationship, please explain. It's basically risk to reward. So if I go on trading view, it's just this. If I take a trade and I go short at this orange level and I place my stop in, I don't know, at 25, and I want to go below the low, 175 is my risk to reward in this case. And of course, you will have trades of like 2R, some of them will be 1, some of them will be 3. And then you make an average of all of these and you have your average risk to reward. And once you have that, you can plot this into the website I just sent, and you will see. You will basically see that what you can allow. Of course, let's just go a little bit to the extreme now. Let's say I really have a high probability of 25, okay? In that case, and let's just say 200 trades, number of lines, let's make it 30. So I have a high strike rate, 85 is pretty high. I'm just aiming for 1-to-1, so maybe 10 pips, make 10 pips to risk 10 pips to make 10. Of course, assuming commissions and spreads are all covered. And then I find one trade every single trading day, which is pretty much 200 days. 1% risk. You will see that you can trade a model like this with extreme good performances, extremely good. And your biggest drawdown is going to be 4%. Because why? Because you will have maximum of 4 consecutive losses. So in this case, we can easily go to 1.3%, and you will see that as long as you do this, we will never reach the 10% breach. And the average performance is massive. It's 500%. But of course, it's going to be rather hard to have an 85% strike rate. If you do, you can easily trade something like this. We can go to the extreme on the other end. I win 10 times what I risk. My strike rate is 15%. I'm risking 1% per trade, and look what happens. Look at the equity curve. It's ugly. You see, in one simulation, everything goes smoothly and you run up the account to 500,000. But all the other times, I don't want to say you blow it, but yeah, you do. You absolutely do. I mean, if you have a drawdown of 43%, good luck recovering that. Thank you, Zeus. I don't know how to pronounce your name. I'll just call you Zeus. Zeusy? No. Yeah, I have a lot of executions, probably, I don't know, 110, 108, something like that. It has been fun, but it was too much work. And if I do live streams and I share stuff on the Telegram channel, I think it's much better because I can provide more value and it costs me less in terms of time. Okie dokie. I'm gonna need confirmation that all of this is clear, and then I will move on into the weekly preparation. I've been live for 37 minutes, so that's good. We will have the preparation, then we can talk a little bit more about price action. I think this live stream should last about 1 hour 50 minutes, not more than that. Unless it's necessary. If it's necessary to do more, I will do a little bit more. I don't have anything to do today. Just back from a vacation. I'm rested. I'll now. So I need just confirmation. You tell me if everything is clean via the chat. And all clear. Thank you, Mike. Great. There is a little bit of delay. So if I repeat myself, it's just me being impatient and sorry about that. Next time I will try to remove the delay, but I hope the quality is not really affected. And I don't think I can do it while in the live stream, but let me check. Which indicators? Let me just check one thing on YouTube Studio. I want to see if I can decrease the delay. And if I can't, whatever. Analytics. Okay. Settings. Nope, not this one. Details. Maybe I have to do it before. Customization, editor. Whatever, it's not here, guys. Never mind. Okay. Let's go step by step. Which indicators are on? You have some lines on your chart. Okay, first of all, let me just share trading view here. Let me close this one here. I do have these indicators, but none of them are active, if you see. I have the power of 3 in here, which basically what it does is on the right side of the chart, it will show you the daily candle. And you can have this from the classic closing, or you can have that from midnight as well, which, yeah, use midnight. So if I click here, it's going to be based on midnight. In this case, I think it's the same. Then I have, this is the daily ETR, which I use. And I use it to just have an expectations. So say I'm bullish and I see this green line that it can act as support and I'm expecting a bounce. If it's past ADR, so we are going beyond the boundaries of what's normal for euro, odds are the market will likely retrace and I can have a small scalp in there. Then I have the daily profile, just highlighting daily open and midnight, but I don't use this. They are here for testing, but I never use them. Macro sessions, just highlighting the London, New York, London close. As you can see, I have the same in here. I built this indicator because I think it's cleaner. Double click, it disappears. But in here, it's a little bit more visual. Again, another power of 3, which is the same as this one, different settings. This is Anke fair value gap, which just shows fair value gaps, but I arrive at the point where I can see them visually. And then I have VWAP. I was just testing with this one. I think it's pretty much trash. I don't like using it. I don't think it's necessary for the way I trade, especially in Forex. Maybe in futures contract is a little bit better. In Forex, couldn't care less. This curve actually gives you the abundance mentality, making you think, yeah. So if you have a nice smooth equity curve, it will help in so many ways. So say you had a 3 months where you've been running hot and everything was going smoothly. As soon as you experience some drawdown, very small, you can look back, and looking back, you will have confidence in your trading abilities because you run up the account to maybe 20% and now you are in drawdown of 2%. That's nothing. But if you from your baseline, say you have a 50k account, you start dropping and you have a 5% drawdown, that's going to be way more problematic because you're losing money you actually don't want to lose. While losing money that you made from the market, it's a different story. I don't know why it's like that, probably because of our uh, old brain, reptilian brain, but it's a different story. And with prop firms, the good thing is, as soon as you pass the challenges, and now it's basically way easier than it was 2 years ago when I first got funded. You had 10% and then you had to do this and then 5% and don't trade the news. Now it's different. The costs have been lower. You only need 8%. You have free retries. Now it's the easiest time to get funded, and I think we are in a little bit of a bubble, but the good ones should remain. And by good ones, I mean FTMO, my Forex fund, my funded FX, and now there are new ones like Goat Funded Trader and Blue Guardian that are promising quite good things. I don't know yet if they will deliver, but we shall see. Another one is the Funded Trader. I have never tried any of them of their challenges, but I know I've been sold they are rather good. But if I don't test it myself, I will not express anything. All the others that I mentioned, I have used them in the past, and I'm funded by 2 of them, and probably 3 by the end of this month. All right, let's go into the preparation, shall we? Okay, after every week ends, either on many times on Sunday, cause on Saturday I do my weekly review, and there was nothing to be done really because I haven't been active at all. But now we have the week preparation. Okay, what do I do? And I'll show you. First of all, and I'll still use this one. Let me just monitor right. Okay, I'll go into the economic calendar, and I'll just use this one. It's plenty. And I'm in incognito mode, so I don't have anything set up, but should be rather quick to do. This is the entirety of the week. I just don't want to see this. I don't care about all of this. Euro, GBP, USD, click apply, and this is what we have. Um, they gave me an account because of the giveaway. I've been testing them. The broker is Think Markets. I never had slippage yet, never had issues with the delayed executions. I'm in the course of a challenge with them. I'm in profit, but I haven't completed yet. I think I have no time limit, so I'm taking it with very ease, no stress at all. Um, so far so good. Nothing that I can say, oh, this is a scam or this is legit, but it's working. And I only did a giveaway, and I also have an affiliate link, but I'm not sharing the affiliate link till I know that they are legit. The giveaway really, it's just, guys, take it. It's a free account. Nothing bad can happen. To trust them, I need a little bit more of time. So yeah, short answer is yeah, I've been using them, no issues. We don't know yet what happens. Let me go into -4, 24 hours. Okay, this week. Okay, Monday. We have the 10-year bond auction. This is going to affect, of course, bonds and a little bit of indices. And as you can see, this lines up perfectly with the PM trend beginning. The hot zone is from 14 to 16, but really it begins at 1301 because they release this one. And sometimes if there is a big auction, the market can actually move a little bit, but it's nothing as volatile as all of this. Tuesday, I will have to wake up rather early because we have GBP news, high impact. We have CPI. The big ones for this week is going to be CPI, absolutely, and FOMC statement. And this is the good one, okay? And notice how the rate, the forecast is 525, and the previous is the same. And that's a nice way to halt what has been happening since recently. We've been going higher and higher and higher since inflation became a factor. And now if we start stopping, that's gonna, of course, have an impact in the market because interest rates are important. And then another big one is the main referencing rate for euro. And notice the difference here. This one, the dollar is likely to stop rising the rates, and euro wants to go 25 basis points higher. So this is going to be very interesting because we start having more of a differential. And it's a pretty packed week, and I'm glad I'm back because I want to trade all of them, or at least the one where I find high probability. We have action, if I'm not mistaken, here. Yeah, every single New York session except on Monday, which is tomorrow. So tomorrow I'm gonna have the approach of a scalper. In all of this, I'll be more of a day trader because we can have lots of volatility. So I ask myself two questions. How volatile will the market be based on the news? And based on the news, I'd say very volatile. Okay. So I'm not gonna be aiming for 5 pips trade. I'm not gonna be aiming for 10 pips trade. I'll be aiming for nice runs of 30 or more. Okay, as a bare minimum. Bare minimum 25. I want to have big runs because the volatility will be there for it. And the next question is something, is a currency likely to be held? Okay, since we have CPI on Tuesday, I'm expecting the minutes ahead of it to have dollar consolidating and potentially even the session prior to it, which is the London session. And I'm expecting the New York session of the FOMC statement to be in a consolidation as well. As soon as we remove this, what do we have next? Oh, we have euro, which again can be held. So in this case, I'd say trade GBP until the news on euro is released. And then after that one, we have some freedom. The market will have classic news. which don't really make the market stall that much as FOMC, NFP, or CPI. And then on Friday, we will have to see what happens on Friday. Because if the market didn't meet a key liquidity pool or a key target, this news will likely be used to deliver to that level. If the market already hit it, then this news here might do absolutely nothing or cause a reversal. So this is done. I'll be a scalper on here. I'll day trade all of the other days except Friday if the market didn't hit a higher time frame level. Then I'll go into seasonal tendencies, which I will not do now because there's not much except for the bonds. So we don't trade bonds. At least I don't, so don't care. And then we will go into COT and open interest. Let me show that. Okay, here it is. I have. Okay, open interest. Open interest. COT and open interest. I have Euro and I'll open the COT. The website is called tradingster.com and I'll have the British pound sterling in here. Let's analyze this one. First of all, very important. Before we do any of this, let me actually go into bar chart. And I'll have to log in, so excuse me if I hide it. I don't want to show my email and password. There it is. Okay. Bar chart, I'll go into the contract with the highest open interest and volume, which is this one. I'll do the same for pound. How many guys are still following? 6. Let's see. Participant. Okie dokie. We have price. We have the open interest. And we have the COT. Now, COT has 3 main participants, okay? We have the commercials, we have the large speculators, and we have the small speculators. Small speculators, we couldn't care less, we remove it. These two are opposed. Now, I need some interaction in the chat. For you, which one of these two is more predictive of what price action is doing? What I'm basically saying is the green line showing what the market will do next or the red line? So I just need the answer. You just have to say green or red. The green. Okay. Let's see if Too Blessed gives an answer too. If it doesn't in a few seconds, then I'll just go on. Yep, next time is gonna be I'm gonna have less latency. Okay, so you guys said, one said the green, one said the commercial. Okay, the commercial in this case is the red. Now, sorry to disappoint Too Blessed, but let's say the green. Okay. You said green. My bad. You are both correct. And guess what? The green is the large speculator. It's not the commercials. So what we have been taught is on the reverse. It's wrong. Nothing we can do about it. It's the large speculators that move this market, and then the central bank is just offering the liquidity. So if you follow what the central bank here is doing, which is basically going short, 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 you don't want to be doing what the central bank is doing because you'd be losing money. Okay? That's why I say I use it differently. Every time people say trade like the banks, they are fucking idiots. They are idiots, and pardon my French, but they are. You don't want to be trading like the banks at all. You want to be trading like you are trading right now, knowing and understanding that the market is seeking and looking for liquidity. You have your setups and you milk it. You will have your 60, your 55, your 50% strike rate. You have more than one risk to reward, and you will make money. Perfect. So, what I look for in here is if the commercials are accumulating, sorry, the large speculators are accumulating positions or not. Let me show an example here. See how on the 10th, no, on the 31st of November, of October here, we had higher move, and I'm confused because this is not the way I use the dates in Italy, but whatever. We have a big run up here. Yeah, yeah, sure it works. COT is not a lagging indicator, okay? It's predictive of what price action is likely to do next. Of course, it works best if you're a swing trader and you're really swinging for it, and you don't want to be against the green line at all. But as a scalper or day trader, knowing that they're accumulating while price is going above here, it's good because you know, okay, fine, they will go above this high. And then you have a stronger bias. Well, let's go back to it. On this day, on this week, we went higher with speed and energy. What happens the very next week? Oh, price goes higher. Magic, right? Crazy. Let me show you another example which will make you see it a little bit better. Actually, I want to show you something which I find crazy. 3 years. Okay, look at this. Guys, this is extremely cool. We follow the green line, okay? On euro, we went higher and we were building positions in here. And then we went higher again. Okay, does this higher high is confirmed with an higher high on the COT? And the answer is not. So this is somewhat of an SMT. And guess what the market did then after this? It tanked from 125 to basically 0.96 because of this big divergence in here. So this is the real distribution that you're looking for. And remember, throughout all of this, the central bank was accumulating longs and the market dropped. So you follow the green line. We can see the same for GBP, which I'll now load up. Hopefully the same settings are saved. And I'll just actually remove the green line, the red line, because it's, by the way, it's the opposite of that one, so we don't care. We just need one. Remove the red, and look what's going on in here. One here, weekly nearby. See how the COT in here is rising while this one is retracing? I mean, if it's retracing and they are not causing this market to move lower, they are accumulating. So if they are accumulating, market odds are that it's going to go above this high. If it doesn't go above this high and starts delivering lower, these guys are trapped. And that's when the smart money, the central bank, can really do a little bit of damage and send it quickly to this low maybe. And this order block on the weekly. Because we have a fair value gap, a low, an order block. Many reasons to go down there. So that's why I'm personally monitoring if GBP USD can find resistance at this bearish order block, and I'm using this one because it's the highest up candle. Close is above it, and in here we just have stupid wicks. Not a lot of volume. Don't care. And this also lines up with consequent encroachment of this fair value gap, this CB on the daily. So say we are not offering any resistance in here. I mean, it's a no-brainer that I'm gonna find a trade from here to here for like 80 pips of range. If I can get 30 to 40, I am an happy man. Extremely happy actually. All right, so I was showing you how I use COT from a very simple standpoint, and then if we go into trading there, we will have more details. Okay, by details I mean we are focused on the asset manager institutional because the dealers are the commercials. Asset manager and leveraged funds are the green line that we saw earlier. And I want to see what they are doing. So they've removed a lot of longs, they added shorts, and the leveraged funds basically added longs and added shorts. The best moves will happen when these two, asset manager and leveraged funds, are in sync. And in here, they are not in sync. Let me check on GBP. On GBP, they added longs, they added shorts, and this one removed and removed. So again, not in sync. We don't expect big, extreme moves, okay? Also see here in percentage, the commercials, basically the dealer, is 95.80% short. And they have been short for a long time, and the market has rallied throughout this year. So they are in a drawdown. Amazing, right? Other reportables and non-reportables, we don't really care for it for the simple reason of this. If open interest is this number, you can see how the asset manager and institutional are making 62% of that on the longs, 11% on the short. So they are basically doing 70%, 73% of the market is theirs. And you can see how this level and this level, they are basically matching. Why? Because they are buying, they have to offer. We can see the same thing probably near 25, 27, 27, 30, 11, 3. In this case, leverage funds are doing the other bit, but these are the big players. These are just people that offer liquidity, nothing else. So I am not expecting that everything is exactly clear, but at least it opened a little bit of your mind because what we have been taught was a little bit not exactly correct. And you can see that on the price action. It's not like, oh, trust me because I know better. It's the green line that dictates. And look for COVID as well. 2020 here. Another example in here. So we made higher high or very similar. This case we couldn't go any higher and we started to break down. And notice how it's perfect in here. This big candle lower happened, and you know the next week who caused it, and it was them because it's delayed. It's 1 week of delay. Okay, so what happens here is showcased here. Then we are flat for a while in the price action, and it was flat in here as well. Crazy. Then we dump again, and we have a small move lower, but don't forget the basics. We just went below sell side liquidity, so it's likely that the market will retrace back. We go back higher, almost filling this imbalance, but throughout the move, these are moving the market. And then in here, the bottom, we have another dump lower. This is real manipulation because we make a higher, we fail to go lower in here, we go lower in here, and since then, we just moved higher. Great, Mason. I'm glad I could help. But well, it was not exactly right. And I did some studies myself, and I was like, no, 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 this cannot work. Because I couldn't find consistency, and the reason for that was it was the reverse. Anyway, I don't really have a clear picture. I'm seeing GBP being actually strong. I want to see how it will behave inside of this range. If we don't offer any resistance, I'll be finding a long, or I'll try to find a long for this high and beyond. Because above that, we don't have much. We have imbalances in here to fill, and I'd like to see that being filled if I'm long, because I will get more pips. Nice logic, right? Then I look at the technical analysis. So we just throw this one out of the way, go back to trading view. I'll open my beautiful 12 chart layout, and I just look at this from this perspective. Okay, we don't have any SMT in Dixie. This went below the low, and this both went above the highs. Cool. We don't have anything in bonds as well in terms of SMT, because SMT in here can sometimes unlock other asset classes. So nothing there. ES, let's open this one up. Closed exactly at this level, and I took a trade from here to here. So good. If it can actually now rotate, and if we go past this level, it's gonna be rather interesting because we have this CB then and this volume imbalance and this swing high. So we will see, but by the way it closed, it looks like it's pretty much it's gonna maybe find a little bit of manipulation to the upside and then tank, but we'll see. Let's see on the daily actually. Yeah, I took equalize, went above it, closed like this. It can actually go lower here. And then I'm looking for clean targets. The cleanest of things is if GBP really goes about this. I don't trade this market, so I don't care too much. I want to see a retracement for yes. That's pretty much it from the scan, and then in here is just for risk on and risk off. This is Euro GBP, this is gold, and this is crude oil. Let's check gold. So gold, I like gold in this case. Why? This is previous week's low, this is previous week's high. We closed exactly at 50% there. So we have good ranges to exploit. And maybe we take previous week's high, while if Dixie fails to take previous week's low. So that would be an SMT with gold, and then we will have a bias for Euro and GBP. That's another way to use it. And crude, is it the good contract? Not really, it's not a contract, but whatever. I'll use this one fine. This is tricky, and I rarely trade crude, but when I do, I really have a high strike rate because it moves nicely and leaves gaps sometimes unfilled, which I like. But we basically went above the swing high, we came back in, we dropped aggressively, we took the low. So we have a rate on the buy side, a rate on the sell side. We are basically stuck. We are not seeing a real willingness to go higher, but we will see that. And this big mess on crude, and don't mind the GBP written in here, it's actually crude, US oil spot. This makes USD CAD trading particularly hard. Not that I trade it very often, but I want to see a nice moving crude too, ideally. All right, then I'll just mark the levels. And I'll go one by one. And I want to show you, because some of you, I'm sure you have some paralysis in doing your homework, but it's so simple. It's crazy simple. Look how simple it is. You just go on the weekly. You already have the levels from last week. You just move it here and here. Nothing else. Then, of course, you remove this one because you don't need it. Euro USD. And right now I'm using FXCM. It's just a test. Usually I use Saxo, but just for completeness sake, that's why I said it. And previous week's high and previous week's low is done. That's hard. And then I'll go into the into the daily. Look what's up there. Classic consolidation. This was expected given the economic calendar. Very frustrating to see, but it is what it is. Dixie saying basically as euro. GBP finding some more willingness to go higher. And odds are we will immediately go for previous week's high in here. While in here we have a little bit more of range we can exploit. This is to be removed. There would be a fair value gap here to here, but it depends on how we actually open. So we're not marking that yet. There's not much to mark on euro, and on GBP the only thing I can really add is the CB. So let me actually have a value gap here and here. I'll call it CB low, CB high. On the top, I'll just move this one. I want to see what 50% is. Actually, you know what? Instead of doing it like this, I'll just drop this one in here, minus fair value gap like this. Make it visible on the daily, and that's pretty much it. It's less work. And these are the key levels that I'm looking for. Of course, every new day, there's going to be new ones that create. So as soon as say for example that we completely fill this on Monday, we come back in on Tuesday, then we go again on Wednesday, we create a fair value gap. Of course, I'm gonna be marking it on Thursday. Then it goes up if it fills it or hits it, and it goes lower. I'll be looking for a trade in here. So you start making up scenarios. At this point in this range, I don't want to take any trades because I don't think anything is a probability. But I can already see how after we had a move higher in here and closed above it, the only retracement really was at the bottom of the CB. So then when I go into the lower time frames, you will see how the bodies were staying inside of that range. And then we started having a reversal in here because the daily very short block was the target. And on the M15, you'll see that even better. Move up, breaks down, takes sell side, bullish order block, hits it. Not my favorite because now for value gap. CB hits it in here. Nice reaction. Down candle. We move away. We came back in. For order block hits it, and we go for the bearish order block. Price closed above 50% of the value gap. We are likely to go up. Yeah, I'm thinking the same to be fair, but doesn't mean that I find an easy trade in here. I don't like how the price action really is. Except the best option would be from this low to this high. We came back in fair value gap, consequent encroachment coupled with these candles and the breaker. So the only thing I'd be marking here is this one. Consequent encroachment is just below it, so this will do. And if I start seeing a reversal in here for a market maker buy model without taking previous week's high, then I'll have a trade from here, not from here, but a little bit higher from here to here. That's a nice 33 pips of range. And I'm not looking for perfect exits. I'm not looking to exit at 126.02. 126 will actually do, 2 pips ahead of the level. For entries, I try to be precise. Exits don't care too much. That's not the most important thing. Previous week's high, if it's not taken, it's even better. Even better. For indices, instead, I'm not too focused on this. I'm monitoring. I'm just monitoring this market. If indeed this is the key reversal point, we can actually see a move lower into this volume imbalance, which would be rather cool. Then maybe bounce, come back into it again, and then we will see what happens. But continuing on with the work of the on here, just move it around it here. Literally takes 10 to 15 seconds, and you are already done with the weekly analysis in this case. And we didn't take any major high in here. We just feel this imbalance on this contract. Nothing to really speak of here except this order block, but again, no fair value gap. I'm not the most interested. And from this order block, we didn't really have a massive move lower. We had pretty lethargic one, closing, closing, up, low, coming back in, and it's high resistance. So I'm not too interested in this one. So this is in the monitoring for now. But of course, I can see potential because we have consolidation, we move up, we accumulate, we hit a key level, we come back into the range. So, say for example, we move higher again, we hit it, we immediately reverse, and we close down here within this range. Next day, I'm looking for a short setup, and the first target would be below these lows, but I will not close that there. I want to see how we close below it, how we trade below it, order block, and that would be one because we are very close to this one, and we don't know yet if we are out of this range. As long as we stay in this range, it's 50-50, and you want to be fading moves past it. And then of course this is a very good one because it's previous week's low, and yeah, I don't care if it's in here. I don't care about marking that because I'm not that precise and crazy. Nasdaq, I don't wanna short Nasdaq, to be fair. It's too strong. Look at the daily. I don't wanna short this. If I have to short one, it has to be this one because it's clean, or this one because it's weak. This one I'm only looking for longs. Can be the wrong option now that it moved so much, but this is driven by AI. I mean, the AI technology and the boom of ChatGPT and whatnot, and the Google Vision and this and Apple. This is why Nasdaq is going higher. This one, don't know why it's not going that much higher. There must be some fundamental analysis which I'm clearly missing. I'm not too interested. My interest is in Forex. That's where I perform my best. That's where I can find the simplest of setups. And I only move away from Forex when it's consolidating a lot and I see an easy setup in here. If it's not like that, I'm not interested. So, all right. It's 5:30 where I live, 25 actually. Guys, do you have any questions? Because I'm pretty much done in terms of analysis. Last thing I should check is bonds in here, but nothing there really. Pretty uninteresting. I just have to move the previous week's high and previous week's low, and that's it. So I'll wait a few seconds. Nvidia put a high like Intel did this with me a major thing. Yeah, like Intel did. I don't think I saw that, to be fair. Let me check. Intel, is that the... I don't even know if it's this one, to be fair. No idea. It's on the Nasdaq, so maybe. But you'll have to tell me, Neil. Jeez, this was a massive move out. It was COVID, whatever. My question is for bar chart. Can you explain how to set it up? It's super simple. Let me share again. Monitor right. Okay. The setting up of this one is simple. It's, let me go on bar chart website. I suggest you create an account so everything will be saved. Okay, Mason, I'll answer in a bit. Let me first go through bar chart, but it's a nice question. So after you create the account, you simply go and select a commodity and you scroll down till you find, for example, I don't know, euro. Well, let's just go for Canadian dollar, which is something that we didn't check. You click on this one. It's going to load up with the current contract. I mean, all of them actually. And you just look at the one with the highest open interest rate and volume. And you click on this one. After you click on it, it's going to load up all of this crap, which I don't use. And you go into full chart. And you'll have this. So, in order to add stuff, you just click on study. And I have OP int. So basically you write open interest and you click on it. And then you say COT, no, commitment of trader, and I use this one. Not the second one, not the first one. The one without anything after that. And the settings are fairly similar, very easy. I mean, you can pick whatever color. I apply it to new pane because I don't want to have it in front of my inside of my chart on top of it. And then for this one, I collapse everything except the large speculators. And you can see in here how the CAD is actually finding some support from there's a big buying in here. So just by looking at this, and remember, this is important, Canadian dollar, we're looking at the futures contract, but on trading view, when we use forex spot USD CAD, it's gonna be the inverse. This is important. So in here you see equal highs, but really it's just equal lows on USD CAD. And let me show that. USD CAD. What did I load up there on the weekly? Yeah, on the weekly. As you can see, it's the opposite. See? I cannot say it like this. It's going higher. It's in reality USD CAD going lower because it's quoted using USD first. So what we can see in here is we went into this CB, we hit the bearish order block. This bearish order block hit buy side liquidity. We broke down with some decent level of speed. We failed to go higher in here. USD Dixie actually is going higher, or has been going higher. This one failed to go higher like Dixie was, so it's CAD strength. And what's the next most logical target? I mean, it's pretty obvious. The brain dead one is this one. Then we have this one, and then I'll make a thicker one for the low in here. So we have sell side liquidity, which is being built, and a cascade lower would be interesting. So I'm not looking for previous week's high, even though we have a trend line liquidity in this and that. I'm looking for bearishness in here. And remember, since CAD is strong, if Dixie finds lower prices, USD CAD will move lower with big magnitude. It's gonna be quick. Notice also how we have this level at 133 big figure, and when it's a big figure we can go 40 pips below it, so we can have a cascade effect till the 600 where we have another sell side liquidity. So maybe we drop quickly there, we consolidate, we have a little bit of a Judas, we come back in, we test the breaker or the order block of the fair value gap, and we try again lower. I don't see price going above here now, unless we hit this level, we reject very strongly, and we start having more bullish PA. Then you'd say, okay, you know what, maybe there was enough liquidity down here to cause a major reversal, but I don't see that yet. Then the other question was by Mason James. How do you approach trading news? Enter before, wait for setups after. Okay. There are 3 news which I never have a position open for. So basically, say the news releases at 8:30. I don't want to have a position open ahead of 8:30, but I can have either a buy or sell limit far away from price to a PDA. Okay. What I mean by that is Say it's a FOMC, okay, and I'm bearish this market, and forget about pips for a second. And I think that all of this is just buy side liquidity engineered, and the market will go above here, feel this imbalance, and then start going lower, sort of like AMD. In that case, I need something a little bit bigger. I'll use this one and make it 3. In that case, say there's FOMC, I can easily have a sell limit appear. Why? It's very far away from price, so I'm not scared that I will have slippage. Actually, I will not have any unless something crazy happens, but that's very rare. I wouldn't have, personally speaking, a buy entry 2 minutes or 1 minute before the news. And as again said, I don't trade ahead of CPI, NFP, FOMC, Euro rates, and GBP rates. So basically, these 5 news I'm avoiding. Staying too close to price action, but I can have limits. Of all the other news, say I was bullish on this market, and I see these two equalize with a failure swing in here, and I want to be a buyer of this order block, and I have a medium impact news, no problem having an entry like this. I'm not afraid of it. Sometimes, absolutely, it will go below it, and then the market will actually work. The move will actually perform nicely and go in my direction and pan out. But the level of slippage is very minor, so I don't really care for it. So the short answer is it depends on where we are in price. Yeah, and just avoid the very volatile ones because you can really do damage to your account. And brokers tend to have delays when major news happen. So you can easily see a down candle in here and your stop loss is not triggered, then you get twice the loss. You only trade euro. Okay, oh, that's good. Just saying Nvidia might have a move driven by the hype, though you never know what kind of development you will actually see in the space of AI. I remember when everything blockchain, oh yeah, everything blockchain was rallying. And even before that, everything tech in the 2000 with the Nasdaq. Yeah. It's true, It's a bubble upon a bubble, but I mean, something can happen in maybe 1 month or 2 months, but as long as it's strong, who am I to fade it? Yeah, it's so many bubbles all the time. It's just hype. It's fear and greed, on a continuum. Um, Mason, was it? Yeah, or James, whatever. Did I answer your question about news? I hope and think I did. And how long do we still have? Okay, I'll be there like, I don't know, 20 more minutes, something like that. And then I'll leave. Any question or whatever, feel free to ask. The turning point in trading for you. Huh. Jesus, man, you make very hard questions. But that's good. It means you think deeply. Okay, I can tell you that I saw how the market was manipulated in 2019 when I first saw an order block plus fair value gap at running stop working out perfectly and the market went into sell side liquidity. So it was something like this. It was on euro. I don't think I can pull it up because the data will not allow me, but I remember this one. We had a move away like this. We broke down. We started consolidating. We took the sell side here by a little bit. We moved higher, and then we broke down for the equal lows down here. And this run up was caused by the the rate statement for euro. So then I understood, oh, look, everything that ICT was teaching was correct because we had accumulation, manipulation, distribution, PDA, hitting the sell side liquidity, and everything made sense then. But it made sense, but it didn't mean I was able to trade it with consistency because I remember that day when I was still in demo, I took a long in here and I got absolutely destroyed. The turning point was focusing on one PDA, and then I could find profitability pretty much immediately because before ICT I was already a break-even trader. I never was a losing trader for whatever reason. So my development was first 2 years break even, and I was using all kinds of stuff, even indicators, which I don't think they are necessarily bad. But if you can use them, good for you. I mean, I don't use them because I like price action a little bit more, but I have nothing against that school of thought. Then from 2020, when I joined the mentorship, I realized, oh, look, okay, I can do this. I can wait for discount. I can wait for premium. I'm aiming for these levels. These are clean. Okay, London can create the low. And I started building a little bit of knowledge about the market and how it worked. And then I settled on OTEs only. So basically the market from a swing low to a swing high coming back to 62 when I had a daily bias. That's all I was doing. And to this day, that model is profitable in a trending environment, not so much into a consolidation. And every year, I really had major lessons by the market. So the best thing I did last year was I realized that I need to have a pre-market routine that tells me what it's likely to happen in the market for that day. And from that, I select my approach. So I'm either scalping, not trading, or day trading. And I only have these three options because I really don't do one shot, one kills and all for like 3 days. It's not my style, even though I can see the potential profits there. Then um, I that's pretty much it. I think fair value gaps alone unlocked a lot, but I cannot really point to one thing. And if I have to do one is trade only when you see displacement. So if the market is consolidating like this, and no major daily, weekly, or H4 drawn liquidity, don't even bother, because the odds you're a little bit more of a gambler at that point. Because if you don't have the drawn liquidity, what are you even doing? You don't know where the market is going, so you're trading setups for the sake of setups. So the section of knowing when not to trade is what really allowed me to maintain profits and avoid many losses. So that's the best thing. So wait for the displacement and have a strong drawn liquidity. Those are the things that made me make a jump. But as I was saying, I became profitable in 2020. So without really much help from ICT, I just joined because I wanted to know more about price action. That's it. I was already decent from Tom Dante teachings alone about support and resistance, and all these students like CryptoCrad, which is now pretty famous on Twitter. I think he has, I don't know, half a million followers, and he has on his pinned tweets a resource list. I think it's a Google Docs document where he teaches a lot of stuff, and those videos are very well made, very well made. They're extremely good. So, yeah, I hope I answered your question. It was a messy answer, but it's hard to say, oh, this is what unlocked everything for me, because that's what the clickbait titles really try to do. But I think I just progressed slowly, slowly, and slowly throughout the months, weeks, and days. And then I arrived where I am today, where I'm pretty comfortable with my PA studies. Oh, your family thinks you are gambling. Well, let's just say you are. Let's just say you are, but you have an edge. And they might not believe in the edge, whatever. Just don't stay in front of your family. Find a job if you want to find a job, and develop a strategy that doesn't really make you stay 24/7 on the chart. And then when you start making money and you have enough savings, make the jump. When you feel ready, and probably that's the wrong thing to say, because you will never feel ready, but when you have enough safety, just make the jump. And you have consistent results, and then they will say, oh, that's so cool, manage money for me. And that's basically what my family did. So don't worry too much. If you are young, whatever, you can make as many mistakes as you want now. I'm 26, so I've arrived at this stage where I want more safety than risks, because girlfriend, family, marriage, whatnot. Oh, in a sense, you are. Yeah, yeah, exactly what I mentioned. But if you have a edge long term, it will. Yep, you are gambling. There's. It's not wrong to say you are gambling, because a poker player, which has many similarities with trading, is a gambler, but he has an edge, and he has an edge and wins because of that. And it's hard to say, think in terms of probabilities, because we like to see fast results, and we equate, oh, I stayed 5 hours in front of my charts, and not only I didn't make money, I lost some. So that's really a tough mental exercise that you have to do. You're not paid for the amount of hours you stay in front of the charts. You are paid for the good decisions that you make throughout your career or your month or your week. So it's a tough career. It's not easy at all, but it's rewarding. It's rewarding. You can work as much as you want, as little as you want, um, and then whatever. If you need to find a job because they are pressuring you, I don't think it's a bad idea, to be fair. Because my development was, I worked 2 years in a row with very to no expenses. I saved everything, and then I got funded, and then after 4 months of consistent results, I made the jump. And I had enough savings for 3 years of fuck ups. So imagine how safe I was. When I saw your playlist of 100 executions at the time, I was convinced and put in the work for months, and here I am. Thank you for sharing. You're welcome, man. It was my pleasure. I mean, the execution really wasn't for any of you, but I said, you know what? Let's just share it. Because there was a lot of, oh, ICT traders can do this, they don't execute, they do this, they do that. And the good thing is, some of the trades that I shared were in demo, but some others were not. And I'm not telling you which one was a live one or which one was a demo, but when people say, oh, you just executed on demo, yeah, not all of them, not all of them. Sometimes it was live. But of course, I cannot really say, oh, look at me, I'm so good. I'm saying this now. All right. If you are starting out, I'm gonna give you two videos which I think you should be watching. Um, there's the Canadian dollar here, and Magic Nail is probably already know what I'm about to show. Incognito mode is so annoying. Trader Zanze. And I highly suggest when Robbins. Never, never. I don't have to do the hype thing. Oh yeah, I'll join Robbins. No, I will never join Robbins. Couldn't care less. Um, these videos. So, a blueprint for trading success, Stop Mourning and Start Improving, Part 1 and 2. You watch these three, you have really a framework and you basically know if you want to pursue trading or not. So these three videos extremely good. Let me see if I can actually share them. So, I mean, it's my chat. I should be doing. Yeah, this guy here is an absolute beast. 4 times world champions of the Robins. So Neil, you're probably spying on me, and you placed this ad here. Yep, absolutely. Just watch whatever Dante puts. And he's not active on Twitter anymore. He said he will be on in September, but he has some old threads. Absolutely gorgeous, so good. He explains everything so perfectly. And he has some more. Trader Dancer, Chat with Trader. I think he has also, it was in this podcast. There it is. Competitiveness, that's an award, of trading and skill sets for profitability with Tom Dante. And he calls himself Dante, but Dante is an Italian name, so I'll stick to Dante. Yeah, absolute ledge. He's a very down to earth guy, and he's funny too. So you get everything. You get skills, knowledge, and some jokes here and there. So you'll have a good laugh. And the stories here, they are pretty entertaining too. Part one and two. They're not necessarily. Well, they are lessons somehow, but they're not nothing visual. So you can actually take a walk and listen to it. Extremely good. I've watched. I'm not even joking. Start Moaning and Start Improving Part 1 and 2 at least 8 times each. And I can quote some of the parts like by heart. Simply because it's a fresh reminder. You know how sometimes you might listen to a song to get you pumped in the gym? That's the same thing. It's just a mental reset of why you're trading and what you should be expecting. It shouldn't be easy, but it's simple. Or maybe it's the reverse. It's simple but not easy. That's what I meant. Because at the end of the day, really think about it. In trading, what you're doing is you study a market. The market is either in a choppy range and you don't want to be trading it unless you're good at it. It's bearish or bullish. Once you can define that, you just look for setups in that direction. And as soon as you have, I don't know, 50 trades executed that way, you'll have very good results in terms of very good size, and you can improve your entries, you can improve this, you can improve that. The issue is it takes time, but that's the right approach. You analyze yourself. So say, for example, your daily bias is shit. 100% of the times you get it wrong. Perfect. You do your analysis and fade yourself. The issue is when you are in the 45-50% strike rate and you're in a break-even stage and you're like, oh my god, what should I do next? And that's the hardest part. Well, if you are terrible, you just fail yourself. And if you're good, you just stick to your analysis. And then you will encounter so many issues. So many issues with I cannot hold a trade for long, and then you'll have to work on that. Then my entry sucks, and my entry suck, and you have to work on that. Then I'm scared to pull the trigger when I have to, when my strategy says so, and then you have to work on that. So then you go in the branch of trading psychology. It's a lot of work. And at the very beginning, I worked 12 hours every single day. And now I can relax a little bit more. But if I relax a little bit too much, my execution suffers again. So I go back to the cycle. So now that I haven't been active for 1 week, tomorrow I'm gonna make sure that I do everything properly because I feel a little bit rusty. Not watching PA printing. It's definitely like being an athlete, not working out for 1 month. You need a little bit of a mental warm up in here, but no issues. The majority of the news is gonna be anyway from Tuesday to Thursday. Yeah, do that as soon as possible, Mason, because you might forget it. You just watch it, you sit down, and you'll find it amazing. So you will stay there 45 minutes. You will not even try to do something else. Because, I mean, I like the British accent too, I'm not gonna lie. So I like everything about this guy. Too good. Official trader Dance Twitter. Let's see what he has. Accept the cookies. Everything you need to know to smash 2023. Oh well, that's too long, but you can read all of this. And apart from the dad jokes that he has, everything is extremely valuable. I've been learning ICT since 2021, so I've got ins and outs decently. My problem was lack of preparation to the market, getting lost in price. Okay, so develop a routine. And first you develop it, and then you need to be able to stick to it. And say you have a daily bias which is bullish, as soon as you take a short, slap yourself immediately because you said you wanted to take longs. So you don't take shorts, even if you see the most beautiful setup. Because remember, it's not the setups that make price move, it's the drawn liquidity, and then you align yourself and define the risk with the setups. So that's the hierarchy. The whole rabbit hole of higher time frame season. Oh, well, these are not rabbit holes necessarily. I mean, rabbit holes that say it's more of, oh, let me discover Enigma. Let me discover how to trade the M1 chart with extreme precision and sniper entries. As long as you're focused on the weekly range and the daily expansion and the time of day, the economic calendar, relative strength, SMT, and market maker buy and sell models, this is all you need, really. And then, of course, you need the displacement, the fair value gap. You get in and you're happy. Ah, like seasonal, you can skip this. COT, you can skip it. Higher time frame, I don't think you can. I think you have to stick to it. The reason why I do it is because I am pretty much settled on all the others. I have not mastered them, but I'm rather good at it. If I have to give myself a score, I'd say out of 8 out of 10, so I'm allowed to go into other stuff. But the most consistent ones are the one I mentioned earlier. Yeah, you were focused on entries. Yeah, you can have the best entry. If your bias is wrong, you will get killed anyway. Or at least if you just get a short into a retracement of a higher move, yeah, you made money, but you didn't really capture the expansion, which is what we want to do because that's the easiest part. And that's where the most displacement, the most speed usually happens. Not always, but many times. So let me close this one too. Let me have, we went above this high. That's cool. Buy side liquidity purge. At least I hope it's a purge. So with that, we can continue lower. If we don't continue lower, I mean, this fair value gap will then be a factor, even if it's not something I'm looking for. A drop, maybe just a pause. And yeah, it's very hard to think because we went from external range liquidity to internal range liquidity, and to see a move up here, I think it's a little bit too much. Because first we have this one, and this one can act as a breakaway, but we'll see. Day by day, we will have more clues. Then I realized that it has burned entry into us, that we cannot unsee them. Well, let's say, talking about ICT, I mean, Not trying to be disrespectful, but I might as well be at times. He is my mentor, no doubt about that. Most of the things I've learned from him. I'm a I'm a mentorship student. I've been with him since 2020, and in 2019, for 1 year straight, I studied this free material. But as of lately, his approach to the market has been too focused on the lower time frames. And if you're a new student, so from 2021 to 2022, you are seeing him doing some very hard thing on the M1, which I don't suggest you do because he's trading from the, first of all, he's trading from the paper trading account, which doesn't have slippage, doesn't have anything, everything is perfect, no commissions. And if he makes a mistake, he can easily erase the account and create a new one. It was so much of a distraction that, as you can see, I don't even have it in here because I created a script in JavaScript to remove it because I didn't want to see it. And it's here, trading view, no ads, but of course it has ads. It's just that I paid for it, and let me see if I can see the code. Oh well, I can't, but I just removed the paper trading because it was just a distraction, a silly one. Um, you don't want to be focusing anytime trading on the paper trading account. You just focus if you're on demo, you just focus on your execution on MT4 or MT5, and those will have commissions, those will have spreads, those will have all you. It will simulate a better live environment. Yeah, I slowly started moving up. Yeah, yeah, good, good, good. Move up time frames because on the M1 you will have so many false signals. It's scary. The consolidation will be very elongated. On the M5, M15, or H1, you don't have that issue. The market tends to be cleaner. Example. Okay, the market, my computer is really suffering. OBS is probably consuming 40% of the CPU. So take M1 here. Look how unclean this is. It's a mess. And this big consolidation is gonna make you second guess everything. Because as soon as you see this displacement in here, let me actually move this to the left. But remember that we entered in here, for example, and you see another move higher and a raid on liquidity and it drops, you say to yourself, oh, okay, fine. These order block in this fair value gap, if filled, they should hold. And they hold here, they hold here. We have a close above it here, and you say, oh no, it's not gonna work. It drops again. You have another drop in here. You have a fair value gap, and you say, fine, now I can move to break even. Haha. I knew it. I'm correct in this trade. And you move your stop loss here because you moved lower in here. The market goes lower, another raid comes back in. You are stopped out of your trade, and you're like, oh, okay, I think it's gonna go higher. Look how many times it tested this level. It's not gonna work. Works perfectly. All of this can be so many times skipped. Just go on the M15, where you see a move here. Okay, fully fills it. It's the order block. Good. Hits it again. Okay, no problem. Do we have major displacement on this time frame? No. Okay, hits it again. You don't like it to see it, but you accept it. Comes back in, and then you have this fast move here. So you have to analyze way less data, which many times means your trade management will not suffer from it. Oh, one more thing that helped me was not looking for perfection. I want consistent setups. And as you can see in here, my stop is probably a little bit larger than it needs to be. My entry is not as precise as the full closure, and my exit is not exactly at the low. 1.75R doing it like this. That's good. That's good. Because you earlier saw our 1.5R can really do miracles, like 300% in a year, stuff like that. So when you go 175 with basically no stress, because you are never really challenged on your stop, that's good. That's very good. And if you want to know my statistics for now is 62% strike rate for an average of 1.48 R. So the statistics that you were seeing earlier, I didn't make it up. I rounded to be mine. And my goal right now is not even to improve strike rate, is to improve the risk to reward, because many times I hit trades perfectly and I don't manage to hold them enough. So that's something I'm working on. For example, on GBP USD, I remember a few weeks ago, I shorted this one. I was short here. And I collapsed the trade a little bit sooner than that. Then I took a scalp from here to here. And if I just held this trade with a stop above this one, no, the opposite. That would have been a great winner for a 3R. Instead, I only got 2 on a scalp, with lower risk too, probably. So, that's another issue that I'm currently focusing on, and that's a lesson for you since you are developing. You will always have struggles. You just have to go. You have to be a someone that solves problems. So if your problem is you focus too much on the entries and not the bias, okay, you focus on that. You develop a process around that to only focus on the bias first and then the entries. Then you do it for like 3 weeks, 4 weeks, 5 weeks. It's embedded in your brain. Then you move forward into the next issue that you will encounter. And don't stop studying. The Don't stop at ICT. Keep developing from other traders. Maybe don't go into a totally different style, which might be a mechanical style, it might be an indicator-based styles, or depending on where the planets are, maybe stick to price action. So only see mentors that talk about price action, and you will learn something from them. You will either learn what to do or what not to do. Because if you see a trader and he sucks, you do the opposite of what he does. For example, you see an unprofitable trader that when price is pulling very quickly, he takes a trade here with a stop up here just to target down here, and he wins, and he doesn't have a higher strike rate of using a 0.7 R as a profit. You know that, okay, fine. What is he doing wrong in here? Oh, he's chasing price when it's moving too quickly and too away. So I don't want to be chasing price, and you learn something new. I look at Genes. Yeah, I've looked at real weird Gene stuff. I think that's his name. I have nothing to say against him. I like what he shares. Sometimes he has a little bit of an ego, but the content is good. The content is very good. I have nothing to say about him. Just positive things. Apart maybe from the ego. I understand it. He has a group. He's doing a little bit of marketing. That's fair. That's fair. Of course, if you want to attract a crowd, you cannot say all the others good, all the other guys are good. You have to say I'm the best or I'm one of the best, and in that way you will attract a crowd because people then will start talking about you. But what I promise you is more consistency. I don't promise you big gains and 20% in a month, because if I was able to do it consistently, I'd be a very rich man. I can eat anywhere between 2 to 4 hour, 2 to 4 hour every single week, or at least most weeks. But I'm not doing that with 1% risk, because when I trade a live account in the prop with the prop, I don't think 1% risk is safe for the way I am built as a trader. I'm more conservative than risky, than risk adverse. I'm a risk adverse guy, so I could be doing a lot more, but I have not yet unlocked that level. I will. Okay, what time is it? It's okay, 18. 10 my time. I think I'm gonna take a walk now. So guys, I'm gonna wrap it up in about 2 minutes. Thank you for attending. It was nice chatting with you. This is recorded, so YouTube will save it for me. I think the quality was rather good. Not the quality of me talking, but the quality of the live stream. I think it's pretty high quality. That's good. Italian connection works. That's crazy. Okay, if you have any final questions, ask them now because I will then leave. And if you have anything to ask me personally, I think there's my Telegram. And inside of my Telegram, you can find my personal account and you can send me a message there. You're welcome, James. Thank you too. You spent 2 hours with me. And of course, you can find me on Twitter. All the links are below this video, and if you want to follow me, great. If you don't want to, never mind. Whatever. All right, guys. Thank you all, and I'll leave now. Bye bye.